Good morning, everyone. It's Ben Buckner with Ag Resource Company in Chicago. It's Tuesday, May 13th. We've got kind of corrective markets, again, almost across the board, financials and agriculture. I think we're waiting on the detail of potential U.S.-Chinese trade agreements. There will be more meetings. I think the markets generally are pretty optimistic, but again, we want to see exactly how this works. It does linger in the background. It's something that we want to communicate does change the landscape of agriculture if China comes back to the U.S. ag markets in bulk. But again, the devil will be in the details, and we wait for that. We're also waiting on a lot of other trade deals. And also the May WASDE report, which is always very, very important, but again fails to include a lot of major surprises, and I think that was the case yesterday. What the USDA told us is that assuming normal weather, northern hemisphere wide, and in South America, 8 and 10 months from now, stocks will be building globally, but the degree I think matters, and they don't expect a major increase in corn and soybean stocks globally, and even to some extent, even the wheat market's kind of capped by the return of importer demand. So the big picture that we saw from the USDA's May WASDE is, again, assuming normal weather, a build in stocks, but only a modest build in stocks. So a lot of this is actually centered on wheat. U.S. soybean stocks are forecast to contract to 295 million bushels, which the arithmetic here is such that losing a bushel of yield on soybeans in the U.S. does push in stocks closer to pipeline minimum. So we can all see this. There's not going to be much tolerance for central U.S. weather adversity. There is none today, but it's a long growing season. U.S. corn stocks rise to 1.8 billion bushel if yield is 181. I think the drop in stocks to something like 1.6 or 1.7 if yield is 177. And then, of course, does China come back to the U.S. market? Those are going to be questions that linger over the space almost indefinitely. And so we want to reiterate, like we talked about yesterday, the USDA's May WASDE, a benchmark from which to work from, but because of trade policy uncertainty, weather chaos that we've seen the last several years, I think virtually every category of the U.S. balance sheets are subject to change over the next 3, 6, and 12 months. So we kind of are back to trading the macro landscape, and also U.S. Northern Hemisphere weather patterns. We also kind of like to take a bigger step back and look at what the exporter balance sheets look like. This is something at Ag Resource we think determines price over almost everything else. Is the world's exportable surplus relative to demand going up or going down? That tells you if you're in a bull or bear market. So like the U.S. balance sheet, exporter corn stocks to use is forecast to expand to 8.5% because of a really, really big U.S. crop and modest expansion in South America about a year from now. But notice that the corn market's not even close to the oversupplied levels that we saw between 2016 and 2019. That's still a couple of crop years away. And I don't think the market has to digest any of this in any given week or month, especially May and June. But this does underscore how important I think U.S.-Chinese trade negotiations are going to be, and also central U.S. weather. We've seen heat arrive already. Does that foreshadow heat during the summer? Time will tell, but there's just not as much tolerance for weather adversity or yield loss that maybe the market thought 30 or 60 days ago. Similarly, in soybeans, we've really seen no change in the world's exportable soybean surplus since 2019. And we've seen really, really large Brazilian production. Last year was a record, decently sized Argentine crops, some slowing of Chinese demand, but the exporter soybean balance sheet has not loosened to the point that the market is oversupplied like it was 2016 to 2018. So again, underscores we need a big U.S. soybean crop. We've lost acres. Does Mother Nature allow that in July and August to reach or exceed trend yields? I do think the market's got to contend with large wheat supplies, and the market has clearly been shedding premium and digesting this, almost every week for the last couple of months. USDA projects exporter wheat stocks to expand to 16.6%. That'll be the highest since 2018. And also, we've seen this almost every month for the last 6 months, where the exporter wheat balance sheet continues to loosen. We're not seeing the importer demand return. We're seeing trade kind of sluggish, and we've kind of avoided at least major weather catastrophes over the last couple of crop years. So wheat market is pretty abundantly supplied. If there was a surprise yesterday, it probably was in wheat, and the USDA's winter wheat yield, the largest since 2016, and probably doesn't get downgraded this year. Just looking back at the last 2 decades of history, The USDA will adjust its winter wheat yield in June, July, and September, but usually the downgrades are pretty muted, maybe half a bushel, at most maybe 2 bushels an acre. So we're kind of locked in something like a 50 bushel national wheat yield, and that keeps ending stocks. We think above 800 million bushels, even in the worst case scenario. So the wheat market is adequately supplied. And on Monday after the close, we've got winter wheat crop conditions 54% good to excellent. That's the highest since 2019. And so I think weather has improved enough that we're going to have a lot of wheat in the United States. And then we're kind of back to trading weather. Don't see many issues today. And I think the most important thing is that we are going to see some welcomed, potentially soaking rainfall in the Dakotas, Minnesota, and the Canadian prairies, which have been fairly dry the last a couple of months, really since the beginning of winter. So corn planting 62% complete. Soybeans 48% complete, kind of getting to the point where we're less focused on dry weather and more focused on soil moisture, rain makes grain, et cetera. And so don't see the big central U.S. weather threat, though it is early days. So that's kind of the story this morning. The May WASDE, as we expected, didn't spark or provide much bullish fuel. We're waiting on the details of U.S.-Chinese trade negotiations, and so kind of looking for kind of a new spark. I think the rest of the week is going to stay pretty choppy. Wheat struggles the most just on oversupply. So that's kind of where we are. We'll see if the macro landscape trade deal news comes in overnight, but all the best. Good luck in the markets today, and we will talk to you tomorrow morning. Thanks for watching.